Hi friends, Professor Joe here. I hope you all are doing great. I have over a decade of experience in Forex trading, and this is a series of videos that I am creating where a new trader or even an experienced trader can learn Forex trading step by step. This is the sixth video in this series. In this video, we are going to look at another important factor of Forex trading. In today's video, we are going to cover types of Forex trading analysis. So there are three types of Forex trading analysis. One is the sentimental analysis, the second is fundamental analysis, and the third is technical analysis. So let us have a look at all three. Let us see what is sentimental analysis. Sentimental analysis also is called as opinion trading. Yes, opinion trading. Whatever information is available in the market creates an opinion about the market and then takes a trade. So let us see what are the factors that are used in sentimental analysis. News sentiments, impact of news article on a currency pair. So whenever there is a news, a trader tries to understand the news and tries to see what kind of impact this news will have on a particular currency pair. Second, social media sentiments. There are a lot of social media that gives you updates about what is happening in the markets. They also create a sentimental analysis. So a trader can take a decision based on the information that is available in social media and the sentiment that these platforms are creating. Third, event-based sentiments. Now, globally, there are a lot of events that are happening. It can be political event, it can be economic events. When these events come out, a trader tries to see what kind of impact it can have on the currency pair. And based on that particular event, a trader takes their trading decision. Fourth, sentimental index or retail trader sentiment. This also, there are a lot of platforms and websites that give updates about these kind of sentiments. So like you can see in these charts where retail trader sentiments are shown. So quite obviously, when it is showing that one particular currency pair is bullish, then in that particular currency pair, a trader who is a sentimental trader will not go for a sell call. They will only go for a buy call. Now, when it comes to sentimental trading, there are a lot of drawbacks to it. Because, it is how you create an opinion about the information that is available in the social media or out there in the open. First is ambiguity. Sometimes the interpretation of information may not be right. You get an information, but you are not able to interpret the way the person who gave the information is trying to give you. So number one point is the information provider's intention was something different and the receivers interpret in a different way. Then it becomes difficult. Second, context sensitivity. So for example, this word not bad. In one particular situation, not bad might mean things are still good. And in one particular situation, not bad means things are going in the wrong direction. So again, that particular word can have different impact on different people. So that is how it impacts the sentimental analysis. So this is another drawback. Language bias. Every single trader will not be able to interpret the language of the information given. So that also can create a barrier. And the last would be subjective. Now, subjective means what is the kind of information or what is the kind of knowledge you have, or are you able to receive that information in the right sense? If you are not able to receive that information in the right sense, and if you're not able to interpret that information the right way because of your limited knowledge, then again that can create problems while you are trading using sentimental analysis. So sentimental analysis also have some very good advantage, like business insight. You get to understand the public opinion. In sentimental analysis, you are compiling a lot of information from the public domain. So you get to understand what is the overall sentiment of the people, and you can trade in that particular direction. Market feedback. You are also getting a lot of information from the market participants. This also plays a very, very important role because the market participants have the first-hand information or maybe some insider information also about what's going to happen in the market. So that also plays a very, very important role. Third is crisis management. Now, some news might look big or some information might look big, but the impact might be small. But some information might sound very, very small, but the impact might be very, very big. So when you get such information, you know that if it is going the wrong direction, then you can place a stop loss at a distance because sentimental analysis require the market to move in one particular direction for some time. So at least you know that because of that particular news, the markets have changed its direction. And if you are sitting in the opposite direction in that particular currency pair, then you can either exit the trade or go with a hedge trade to protect your equity. So there are some very good advantages in sentimental analysis also. A lot of people think that sentimental analysis is the same as gambling. Let me tell you, the answer is no. Sentimental analysis and gambling, there is massive difference. Sentimental analysis has a process of understanding the overall sentiments of the markets or the market participants, whereas gambling is purely based on luck. Sentimental analysis rely on data, although the data is not very clear, but still it depends on data to collect the sentiments of the public, market participants, businesses, economy, multiple things. So sentimental analysis uses some form of data, whereas gambling never uses any type of data. It is purely based on luck. So there is a massive difference between sentimental analysis and gambling. This is something that all traders must keep in mind. So if you are taking a trade without looking at anything, that is gambling. That is purely based on hope, which is very, very dangerous in Forex trading. But gambling is dangerous anywhere. When you enter any business without having the right information, it is gambling and it can get dangerous. The next type of analysis is called as fundamental analysis. Fundamental analysis works very well in the stock market. It also works in the currency market, which is the Forex market. But Forex market, there are quick changes depending on some news. So you cannot totally rely only on fundamental analysis in the Forex market. In the stock markets, there are traders who purely depend upon fundamental analysis and have been very, very successful. Traders like, I would say not traders, investors like Warren Buffett, Charlie Munger, they purely look at fundamental analysis before they trade. But when it comes to Forex market, it is different. Okay, so you can use fundamental analysis up to a stage. But what is that you look when you are looking at fundamental analysis? So let us have a look at that. In Forex, fundamental analysis means evaluating multiple factors that can influence the currency pair, like economic indicators, GDP, inflation, trade balance. So whenever the results come out, you can have a look at the results and you can decide in which direction you want to trade. Second, interest rates. Because if the interest rate is high, it will attract a lot of foreign investors, which will give foreign currency to that particular country. So when a particular country gets a lot of foreign currency, their local currency become in demand. So it really impacts the Forex currency pair. The next is political stability. A stable government helps in creating stable businesses. And if there are a lot of stable businesses in a country, a lot of foreign investments come into the country. So political stability also plays a very, very important role fundamentally in the Forex currency pair. Most of these informations related to fundamental analysis can be collected from social media, websites, or newspapers. This is where most of the information is available. There are some specific websites also like Forex Factory where you can get information about fundamental news for Forex currency pairs. Fundamental analysis mostly traders use for long-term trading. But as I told this point about news, there are some fundamental traders who also trade the news. Okay, so we have already discussed this in a previous video, so I do not want to discuss that in detail. Fundamental analysis also helps the trader to stay in a trend for a long period until and unless the impact of that fundamental news is not going down. So as a trader, you need to keep your eyes open on fundamental analysis also. A trader who trades in fundamental analysis is looking at long-term trend. And the last type of analysis is technical analysis. This is the most favorite for most of the traders in the Forex market. Technical analysis is trading based on historic information that is available. Most of the traders use charts for looking at historic data. When you talk about charts, there are many types of charts. Most of the traders use these three types of charts. That is line chart, candlestick chart, and bar chart. These three are the most popular ones. Then there are many other types of charts, which we will have a look in the upcoming videos when we will talk purely about charts. Technical analysis also talk about trends. Like while you are trading, you are looking at higher highs, higher lows, lower highs, lower lows. So these are indicators which tell you that whether the market is in an upward trend or a downward trend. Then there are a lot of indicators which a technical analyst use. One of the most popular indicators that a technical analyst use is called as moving averages. A technical analyst also look at support and resistance levels or support and resistance zones. Now there is a lot of ambiguity on that also. A lot of people draw just one particular line for a support and resistance. Actually, support and resistance is never a line or never a point. It is basically an entire zone, which we will also discuss in detail in coming videos. A technical analyst use a lot of chart patterns and candlestick patterns to identify the movements of the markets. A technical analyst also use force indicators like oscillators. Some of them are MACD, RSI, stochastics. A technical indicators also focus on volumes, which is very, very important. A technical trader will always want to enter a trade in the direction of the trend plus when the volumes are high. A technical analyst trader have multiple choices of time frames also. They can use from 1 minute chart to monthly charts. So there are multiple types of charts: 1 minute chart, 5 minute chart, 15-minute chart, 1 hour chart, 4 hour chart, daily chart, weekly chart, monthly chart. So a trader can use any of those in technical analysis. Normally, a trader who focuses on technical analysis is looking at smaller time frames. It is basically the fundamental analysts who look at longer time frames. One more important thing about technical analysis is combining multiple indicators. Like a technical analyst would want to enter a trade where there is a good support, a good candlestick indicator, a good chart pattern, a good volume, a good stochastics or an RSI indicator showing that there is a good buy over there. So a good technical analyst will combine, or you can call it, look for a confluence of technical analysis before they enter a trade. This is one of the most strongest and positive point about a technical analyst. So in summary, we can say that majorly there are three types of trading analysis that a trader can look into. The first one is sentimental analysis, the second one is fundamental analysis, and the third one is technical analysis. Depending upon the trader's style of trading, the trader can choose any of these analysis style. At the same time, a trader can combine all three also. That is the advantage of trading. Applying the right knowledge at the right time, right place will make a trader extremely successful in the Forex trading market. I have written a book for traders. The name of the book is Traders You Can Win, but First Learn to Lose. In this book, I am focusing more on technical analysis, but information about sentimental analysis and fundamental analysis is also given. I have also clearly explained two trading strategies also in this book, which can be very, very helpful. If you love the content that I am creating, please like and share this video. And for more such videos on finance, technical analysis, fundamental analysis, personality development, please subscribe to my channel. This way you will get updates whenever I will create a video. All I can say is keep learning, keep growing. Thank you. Namaskar.